Thank you, Professor Mahesh, for his very kind introduction of me. But I would like to be introduced. You call me by any designation. I'm basically a teacher, and in front of teacher friends, I am a co-teacher. I will not consider myself as a resource person. I would consider myself as a co-teacher, where I'm going to share my experience as a teacher with you, taking out a particular topic. And economics has always been a subject which, as a commerce and management teacher, very close to our, I would say, commerce and management are the offshoots of economics. Without economics, there is no commerce, there is no management. And there is also a connection. We are now talking about National Education Policy 2020. Where is the spirit of NEP 2020 is to have a holistic, multidisciplinary and futuristic institutions, higher education institution. That is the spirit of NEP 2020, as I have understood. I have not gone to the details. I just heard Dr. Kasturi Rangan discussing about the new national education policy in our own department in the last year, where all the vice chancellor of different universities were also a part of that discussion. There, they had a vision of making all higher education institutions multidisciplinary institutions by 2030. Whatever is the pros and cons of the education policy, that apart, I can definitely see there is a strong connection between economics, commerce and management, and even law. If you extend it further, all these four disciplines are so interconnected. And if our instruction as a teacher is able to blend these and then deliver to the students, I've always found, I've done this in my institute, I've always found that the students receive it very well, because it is going to be a kind of an experience that adds value to them. Instead of looking at one particular issue in isolation, looking at the broader picture and telling them a particular concept or an issue has always been interested me as a teacher. And therefore, when the offer came to have a discussion with you people, I was really happy, and I'm also happy to see my oldest friend, one of my finest friends, Jagdish sir here. It's nice to speak to them, to my fellow participants. Now, sir, this is I will just start sharing the PPT. If I feel like, coming out of the PPT and talk to you on the grid, because I have put on I put in more than nearly 27 years of experience. I've gone through the chalk and talk method to click and talk method in between. And now we are in act and talk mode. Because we should be knowing where the camera is, where I am positioned, and whether the lighting is sufficient. So it's more of an act and then talk, rather than our conventional mode where we are very comfortable, using the stage, using our mannerisms, your body language and your voice, everything. Now you are stuck in a chair, and in front of you is a camera. And since I have also coordinated 2 refresher courses very recently, just day before yesterday, the second refresher course got ended. So now I have a little knowledge about as to how to deliver a lecture in an online situation, slowly getting adjusted to it. Probably you might also have to do so. You might be already doing it also. Well, let me start share screening. This is, are you able to see the screen?
Yes, sir.
Yes?
Yes, sir.
So I'm trying to reconcile the various economics theories with corporate finance. And this is the topic that I thought is appropriate for whatever presentation that I'm making. And I'm also told that a few of you are from outside Karnataka. So that limits my presentation only to English because I would have loved to speak in Kannada because I am a product of Kannada medium government schools till 10th standard, and I'm a proud Kannadiga. In my tenure as a chairman of the department of management department, first time in the history of management department, we celebrated Rajyotsava twice. And soon after me taking over as the chairman, I made it Kannada as a mandatory administrative language. I changed all the boards, name boards in our departments, first in Kannada and followed by English. These were some of the initiatives that I took. But now that this audience is a mixed audience, I would have loved to use, but with due respect to them, I'll stick on to the simple English that I can speak because, as I know, my English is also not as strong as all the management or professors of university. I only can speak very simple language. I do hope that you'll be able to receive it. These are some of the headlines that we normally see. I just now go to corporation, business corporations as such. These are some of the headlines you see in the newspapers. Bhushan Steel, he siphoned off 2,000 crores. Therefore, he has been sent to the judicial custody. Nirav Modi left the country with 13,800 crores by using fake guarantees. Gitanjali Group, they frauded Punjab National Bank, diverting 3,258 crores abroad and used dummy companies to divert the money. Religare, there is an allegation of cheating and fraud, 740 crores. Manpasan Beverages, Enron, this is the giant of all the scandal which happened in 2000 in America. I'll come to that story later. The Satyam, Indian Enron. All that is there about Satyam is Asatyam. Headlines. 1 + 1 = 11. Satyam equation. Volkswagen. Unfortunately, I own a car. Fortunately or unfortunately. See the kind of carbon emissions you can see in the photograph. Malia. Okay, he is a flamboyant, man with a Midas touch. Where is he now? Ranbaxy, the dirty pill. See, these are the headlines in corporate world. Therefore, I just took it as an initial thrust to my presentation. This I would like to take it as an outline in the presentation. The premise, I'll go to the premise, the economic theories, corporate evidences, and emerging legal architecture and judicial trend. I would like to touch upon this, but I don't think within one hour I'll be able to do so. Let me try. I'll try. The premise is this: moral hazard is on the rise. These are the words that I've taken from economics theories. I'll tell you which economic theory is it. Lemons are all over the place. Lemons. Those people who conceal the quality of their products and services and project them as good quality products. One of the noted economists call them as lemons. Trust deficit is the order of the day, especially during COVID. You never believe your own friend. If somebody comes to your house, you will feel awkward because you don't know where he has gone, where he has come. Dysfunctional behavior. See, this is one important word that I am very, very passionate about. Dysfunctional behavior, as the reward is on the measurable performance. This is the word which is coined by Oliver Hart, who got 2017 Nobel Prize for Economics. And now this is the time where COVID time breeds lemons, because this is the right time for people who would like to indulge in dysfunctional behavior. This is the time. It's the time that breeds lemons. With this premise, I'll just go further.
Excuse me, sir. So sorry for the interruption. Kindly make it as full screen.
Full screen.
Yes, sir.
One second. I know I'm also not so conversant with technology, and if I do so, if something wrong happens, nobody is there to help me out. I'm not finding.
Prasad, you can help me out. Help him out.
Sir, you go to slide side.
Slide show, sir. Slide show.
Slide show.
Slide share ಮಾಡ್ತಾ ಇದ್ದೀನಿ ಈಗ ಮಾಡ್ತಾ ಇದ್ದೀನಿ. ಅಲ್ಲ, ಕಾಣಿಸ್ತಾ ಇಲ್ವಾ? ಫುಲ್ ಕಾಣಿಸ್ತಾ ಇಲ್ವಾ ಸ್ಕ್ರೀನ್ ಅಲ್ಲಿ? Is it not visible? I mean,
No, it is visible, but it is not in a full screen.
okay. But you'll be able to see that, right? I just check.
Yes, it's okay, sir. It's okay.
Let me see if I find somebody, because if I do something, I am technologically very, very vulnerable and weak.
And then it's okay, sir. No problem. It's okay, please.
Please bear with me, and if I find somebody,
Sure.
do it. Because I'm not F5, no?
Yeah, sir.
F5.
F5.
Shall I press?
It's only F5.
With all your support, I will press. Okay. No, it's not coming. Okay, I'll just see when I can do that. Okay, this is what Adam Smith said in 1776. See, when a company form of business organization started emerging, as you know, company means owners are different, managers are different. Owners are the shareholders. Managers are the people appointed by the owners to run the business on their behalf. See, unlike sole proprietorship or partnership, where owners and managers happen to be the same, owner is also the manager. Under partnership, all the partners themselves manage unless and until he is a sleeping partner. But in case of corporation, there is a very clear distinction. Owners are separate, managers are separate. Owners are shareholders, they are putting their money into the business, and managers bring in expertise, their knowledge, their experience in taking decisions. See, there are two factors of production, as you all know. Capital comes from owners, labor comes from managers. They all put together in a formal, efficient organization structure is called as corporation. But Adam Smith had reservation in 1776. He says the directors of such companies, the managers, the board of directors and the managers, being the managers of other people's money than their own money, it cannot be expected that they will watch over it with the same anxious vigilance with which the owners watch their own money. Just say, you are managing public money. Public means, I'm talking about shareholders or owners. They have put in their hard-earned savings into the company's shares. Now, as managers, you are given that money and you are asked to manage it. Will you be exercising same caution, or will you misuse? Will you neglect? Whether negligence and profusion prevails in the management of the affairs of such company. This was an apprehension that Adam Smith had in 1776 itself. When I am managing somebody else's money, will I be so careful as if I will be managing my own money? Or will you misuse it? Will you abuse the money? Let us see. This is the, and then I got article in Economic Times just before COVID. I will tell you, even getting into COVID situation, our economy was already in stress. COVID made the things even worse. Unlike in 2007 and 8, when there was a economic crisis, at that point in time, Indian economy was strong. We were able to come out of it. Economy was fairly insulated from the ill effects of the crisis. But it is not so last year. In last year only, there were so many scams that has happened. Getting into the economic. So there is an erosion of trust was one of the headlines that I saw in Economic Times. And very recently, I saw this, June 2020, Ernest and Young report. This is a research company which said, now that we are in COVID times, fraud, bribery and corruption, this is a ripe time for those people who indulge in shortcuts, fraudulent practices, violation of the law. This becomes acceptable in extraordinary times. So because since the business are under pressure to perform, they may tend to do the business in unethical ways also, is one of the report that I saw in one of the papers. Now, in this background, I would like to explain these theories now. Agency theory, contract theory. I think these are the theories maybe known to you, to some of you. You might have been, doing that in the classroom. You're explaining that in the classroom, but you're now listening it from a management and commerce perspective. That's all. So agency theory, what does it say? Agency theory say there is a separation of ownership and management. Principal and agent relationship are there. Principal are the shareholders. Agents are the managers. Now, what is their behavior? What are agency costs and ownership structure? This is the title of the paper. Ownership structure in most of these big corporations is called as diffuse ownership structure. Diffuse means all the shareholders are spread across the globe. They are often strangers. A few of the managers will run the show on their behalf. So you are, for the managers, what does the company give? The company gives them salary, compensation, perks, whatever they want. He calls it as agency costs. These are the costs which are incurred in order to make managers work as per the requirement of the owners. Do you know what is the objective of any business corporation? The ultimate objective. The objective is to maximize shareholders' wealth. Means you take any decisions in the company, ultimately that should lead to an increase in the market value of the shares held by the owners. So now the owners are telling the agents or the managers, see, this is the expenditure that I am putting on you for your expertise. In turn, what you do, you take such decisions that maximizes my value. So this is the contract. This is the contract between owners and managers in case of a corporation. Now, the big question is whether the managers keep the interest of the shareholders as their supreme value, or will they indulge in self-serving behavior? Whether they will try to increase their personal wealth, whether they misuse that freedom that is given to them in order to say, there are say 1 lakh shareholders of a company. All the 1 lakh shareholders cannot manage. All the 1 lakh shareholders cannot supervise what the manager is doing. They will only say, this is the contract between you and me. You are given this. In turn, what you do? You give me an increase in the value of the shares of my company. So this is the contract between owners and managers. Now, whether the managers do this or will they indulge in self-serving behavior is the $1,000,000 question that I would like to now have a discussion with you. Now, what does the contract theory say? I'll come to contract theory. Contract theory says a contract mitigates the conflict interest among the parties. So you should have a contract. Therefore, if there is any conflict of interest, contracts will mitigate them. Then, going further ahead, they also tell you as to what should be done. Now, the contract says, say, we are paying you so much. What is your job? Profits should be this much. There must be some percentage increase in the profits. There must be an increase in the market value of the shares, market share, production. You give them the targets. Say, this is where I want all of you to study contract theory, please. It also gives some insights to our teachers also. Teachers may also tend to get into dysfunctional behavior. We may try to do certain things which gives us further promotion. Say, for example, all the younger teachers today, I tell you, I have seen it in my own department, in my other departments, where the younger teachers are now so much into, I'm not saying all the younger teachers, many of them at the university level, that they are doing API scores on a daily basis. I find a few of my own students already publishing 150 papers. They have attended 70 to 80 seminars and conferences. Now, what does Oliver Hart say is, this is dysfunctional behavior, because you are actually measured by what you deliver inside the class, the value that you create to your students. But unfortunately, the measurable performances are these, and you try to indulge in a dysfunctional behavior so that you try to capture the contract. So this is a very important word. You try to capture the contract through dubious means. And by doing so, you are resorting to a word called as moral hazard. And a moral hazard done by a company may have a detrimental effect on some of the shareholders, but a moral hazard done by a teacher will destroy generations, right? So he talks about that. Please read that. I'm just giving you gist. I'm just opening up. Now, what does the information asymmetry theory say? It also talks about market for lemons. It gives, just try to understand. This is a very small story kind of a thing. He gives an example of a second-hand automobile. I think you may be knowing about it because you're all economic teachers, but still you listen it from a commerce man, management person. See, when you go to a second-hand car market, you will definitely find all the cars of different makes, different company and different manufacturing dates under one roof, right? Under one roof. And the quality of the cars range from an excellent car to a lemon. This is what he uses the word lemon there. Which is a lemon? Lemon is a product which is an inferior quality product. All of them are bracketed under one roof. He calls it as pooling equilibrium. Pooling equilibrium, wherein all the quality cars are under one roof. Now, what a lemon does is, he will temporarily mimic a good car and put it in such a condition that when a buyer comes, he gets attracted with the lemon, not with the excellent car. You just see, he does not conceal the real information about how it is being, over a period of time, how it is being maintained, what are the accidents that the car might have gone through. No information is available. There is information asymmetry. Only the seller knows. Buyer does not know. Buyer looking from this angle, for him, even a lemon looks attractive than an excellent car. So he is untruthful about the quality of his car, and therefore it is called as moral hazard. It is moral hazard. Lemons are those people who suffer from moral hazard. Now what happens in the market? All the cars command the same price. Then the sellers of the qualitative cars are not happy with it because they know that their car is a qualitative car. Therefore, what they do, they will come out of the market. They come out of the market, and in doing so, they give credible signals about the quality. And this will happen till the time all the qualitative car owners come out of the market and only lemons remain in the market, and everybody comes to know that these are lemons, and the market collapses. Now, this is his theory. See, the sellers of the qualitative cars, by coming out of the market, give credible signals, and they establish separating equilibrium. Say, pooling equilibrium to separating equilibrium. See, these are some of the theories. I'll tell you, it can be applied to you as a teacher. Say, all our teachers and all our PhD, all our MCom, MA, and why does one teacher gets more, favor from the students, in the sense students like him? It's only because of the credible signals that he gives in the class. He is creating a separating equilibrium. I also tell this to our students. See, you're all MBA. All are 7.5 CGPA, all of you. Pulling equilibrium. Then how do you establish a separating equilibrium? Give credible signals to your potential employer. Then only your potential employer will take you up. So this is called as credible signals. So don't be a lemon, be an excellent product. Don't suffer from moral hazard. Don't try to get into getting marks, but finally it is your performance, and is your performance as appraised by your potential employer, that is going to give a separating equilibrium for you. Then what is efficient market hypothesis? Now, a company resorting to all this, let me tell you, these companies will give, say, for example, I'll take the example Satyam. What do the Satyam people did? Even if the profits were only 4%, they were showing 23% continuously for 4-5 years. They manipulated the earnings. The board of directors and the auditors, the statutory auditors, came together and they put a rosy picture. And they were only showing that even though it is 4%, they were showing 23%. But the market does not know. Market is efficient. The market will not be able to distinguish between this is the right information and this is the wrong information. Any information that is fed into the market absorbs that information. And immediately it reflects in the share prices. An efficient market is one where whenever the information is put into the market absorbs it and immediately adjusts its share prices. But unfortunately, in this case, all along, these companies gave only wrong information, fed wrong information to the market, and the market was efficient because it was unable to distinguish between good and bad. It thought it is good, and the share prices was always on the high, and until something happened and it has to come down. Then Modigliani and Miller, you will be knowing traditional trade-off theory. These are connected theories where he talks about what should be the extent of debt in the capital structure. Say, as a company, when you raise money through debt and equity, I would call this as two important sources. Equity is owner's money, debt is outsider's money. Outsiders means loan funds on which you have to pay interest. These people said, the last two theories, they said, you cannot depend on the debt for a longer time. There is a limit to which debt can be used in a company. Beyond which, if you still go for further debt, there is a possibility of financial distress. There is a possibility of bankruptcy. This is what the traditional trade-off theory says. You have to strike a right balance between using debt is also beneficial. Why it is beneficial? Because you pay interest and you pay lesser interest than the dividend that you pay to the equity. But that interest is also tax deductible. You get the benefit of tax, no doubt. But at the same time, if something goes wrong, your company may get pulled down. So use debt very, very judiciously. There is a target beyond which you don't use. Even for us, for you and me also, how much loan that we can raise? There is a limit, isn't it? The more the debt that you use, there is a possibility that we may also get into a debt trap. This is what this theory says. Now, I'm just giving you very brief account of these theories. Now, what do the companies did was, see, I'll just, these are some of the examples. Say, as soon as you become the manager, it has happened with Vishal Sikka, who was the first non-Infosian director of Infosys. Immediately, he increased his perquisites from 54 crores to nearly 596 crores, an increase of 900% after becoming the CEO of that company. They do that, manipulating of earnings and dividends. This is the case with Satyam. This is the case with Enron. They only show inflated figures, inflated profits, rather than the real profits. Then maximizing the size of the firm rather than its value. We call it as empire building. See, there are companies who go on buying the company. This has happened with Vijay Mallya. What has happened with Vijay Mallya is simple as this. He wanted to get into airline business because he has captured everything within the land, earth. He was into fertilizers, he was into beverages, he was into even buying football teams and IPL teams. He was a flamboyant and everything that he touched turned into gold till he tried to touch the sky. Am I right? And he did. There was a failure initially. One failure was that he did not listen to the capital structure theory. Capital structure theory says whenever you are going for an unrelated diversification, going for something which is not your cup of tea, you are going it for the first time, an unrelated business, fund your business through equity, fund your business through owner's money, not with debt. Sala tagobedi, nim duddal madi, owner's duddal madi. Why? Because you get a cushion, you get some time to take off. Whereas with debt, there is no time. If something goes wrong, interest starts piling up. And this is exactly happened with Vijay Mallya. Then excessive diversification. Just say diversification. See the spelling? This spelling was given by one of my students who made this slide. Diversification. You go for excessive diversification. The conglomerates that we are talking about, all those businesses are in some of the businesses, the situation has worsened. And then siphoning off of corporate assets. This is again, siphoning off of corporate assets means what do these managers do is from the business profits, they will create their own personal companies and make a tunnel. This is called as tunneling. Tunneling what? The profits, the cash flows of the focal firm will be transferred to the shell firm. They call it by different names. They call it as special purpose vehicles. They call it as new projects. But we have seen enough examples as to how public money is used for personal purposes by these board of directors. And when all this is being done, let me tell you, very important thing that happens is the board is packed. Packing the board means what? All the directors come together. Now, what has happened with Nirav Modi? all the directors, all the promoters, plus a corrupt bank official at Punjab National Bank who gave the letter of undertaking in order to raise money. So everybody comes into picture. Everybody is a beneficiary. They all do it together. We call it as packing the board. These are the examples. These are the examples as to how people do. Now, what I'll do is I'll just get into some of the corporate evidences. Now, it has Infosys is a very good company. It is powered by intellect and driven by values. I know Narayana Murthy is from a place called Shidlagatta, a small village near Shidlagatta, and Shidlagatta happens to be my own native place. He was a son of a school teacher, and he built that empire very, very passionately. But the moment Vishal Sikka came, all the problems came. What did he do? See, 45.8 million, and he's increased it to 487.6 million. The first non-Infosian. Then he was taken away by Narayan Murthy, and immediately one more fellow. Right now, Salil Parekh, sorry, is the CEO from 2018, and he's the second Infosian, non-Infosian. When I say non-Infosian, I'm talking about the first founder, 7 engineers who founded this company. They were only the CEOs right through. Vishal Sikka was the first non-Infosian. And let me also tell you, there are people who give a contradictory argument. I don't know whether it is correct or wrong, but this fellow, Vishal Sikka, is the first non-Infosian. Therefore, the Infosians, the original Infosians, were jealous about the way this fellow started functioning. He went into a different mode of business, acquisition model of business. These people had only development and expansion model of business. But Vishal Sikka started acquiring many other businesses. So it was not their original style of business model. But he started doing that, and suddenly there was an increase in the revenue also. But there are people who say that since there was an increase in the revenue, he started getting more salary, more compensation, which is connected to the profits. So these people got their eyes red. Therefore, they changed him. Now Salil Parekh has come. Even when Salil Parekh came, again there was a whistleblower complaint against him that he is inflating, he is instigating people to inflate profits, misrepresenting the deals, abusing travel privileges. But that whistleblower complaint was investigated and found recently that there is no strength in that particular complaint. But soon after that information came to the public, on one day, 16% value of Infosys share was eroded in a single day. So, because efficient markets are efficient. Markets do not know what is there behind. The moment information is released, markets will react immediately. Then Enron, do you know, this is a very big case study. In fact, I started knowing about this economics theory because of Enron. I used to teach it as an accounting scandal in my business ethics and values class. I started reading one World Bank series paper. There they said, these are the words, to call it Enron as an accounting scandal is like looking at the scandal in the tip of the iceberg. When you go deeper down, you find that agency theory, information asymmetry theory is grossly violated by Enron. Then I started reading what is that agency theory, what is information asymmetry theory, and then came to know that, yes, whatever they said, it is being done by these people. Say, they were into energy sector. Then the core business was energy. There was no problem at all. The company was doing exceedingly well, but they wanted to diversify, excessive diversification. You want to build an empire. You want to get into internet. You want to get into communication business. You want to get into water supply, which is not your core area. And when they tried to do that, they lost money. And they wanted to get into that only because they wanted to make, these directors wanted to make big money in a shorter period of time. They siphoned off corporate assets to buy dot-com shares so that they will make profits. But unfortunately, they entered the market at the peak and there was a dot-com crash. All the share prices came down and they suffered heavily. So now what to do? You will not be able to tell this to the shareholders. They try to window dress the balance sheet. Even though there was a loss, they show it as profits along with your auditors. And this went on for some time till one whistleblower. See, in all these things, there will be one. You do any fraud, you leave behind one clue. And that clue was taken up by this Sharon Watson. She is the whistleblower. Now, he is the chairman. Ken Lay, CEO, chairman. He was convicted for 165 years because he was found as accused in 10 cases. They are all now in jail, some of them still serving. It is a 2000, early 2000 case. And Satyam, you do know, this is what they did. This is what they did. If the bank balance was 321, they reported 5,361 crores. And they also created 6,000 fake salary accounts. And you just see the promoters, the people, the board of directors, they know that there is something wrong happening in the company. Therefore, what they said, they started selling off their shares from 25% on the day when it was made public. The promoters held only 5%. This is information asymmetry. Management has information, but the owners do not have information about this company is going to become bankrupt. They did not inform the public. Instead, they started selling their shares. They made the money, but who lost the money? The public who lost the money. Now it is still under. He has come out of the jail. He is under trial. The enforcement directorate has attached 6,000 acres of his property now. And then, yes, Volkswagen. Now, what did the Volkswagen did? Volkswagen in America was the second largest selling car company. The first was Toyota. The first was Toyota. So they wanted to overtake Toyota. What they did was, they can only do so if you offer a better mileage. If you want to offer better mileage, then emissions, environment emissions would be high. Therefore, what they did, when they go for this testing for environmental emissions, they inserted a cheating device inside. Under standard testing conditions, the emissions were well within the environment norms. The moment the cheating device is taken away and sold to the customers, and the customer starts riding in the market, on the roads, it used to emit more carbon and nitrogen emissions. Now, somewhere it was caught, and the moment it was caught, he's been put on jail. You just see from the market capitalization in a matter of few days came down from 95 billion to 60 billion. So this is the loss that has happened to the public. This is what Adam Smith said 200 years ago. This is what all our theories say, that there is huge loss that the company makes because of 1 or 2%, because of 1 or 2 managers who takes decisions like this. Then this is a classic example. Now, when he went into diversification, everything was going well. He was called as man with a Midas touch. Somebody told me in one of the classes, he was a man with Midas touch, sir. Whatever he touched turned into gold. When he was into beverages and alcohol, the entire country was in good spirit. But unfortunately, he went into unnecessary diversification, and that too, all the theories said, when you go for an unrelated diversification, don't take debt, go with owner's money, but he still took debt. And then, what is the case today? There are so many legislations have been passed because of him. He said, I am in hospitality business, not in transportation business. I want to sell lifestyle to people, Indian middle class. I want to give Indian middle class in domestic flight, international experience. He actually gave, no doubt about that. But at what cost? Finally, at the cost of losing out and making banks run after him by giving the debt, and even his assets are also being attached by ED. Now, these are some of the examples. I've never gone into the details of it. I'm trying to connect these theories. These are very, very important economics theories which have been developed over a period of time. Whether COVID comes or something else comes, the basics will never change, isn't it? Your content and your delivery may change, your structure may change, but the business model may change. But basics are basics only. These are the basic economic theories. This will remain so even for another 200 years. But the thing is, these people, these managers or board of directors, did not listen to the outcomes of these theories. They wanted to create maybe their own theory in the future, but unfortunately, they had to close down because they violated the principle. They have violated the basic principles of economics, and therefore they resorted to fraud. People lost money, and even law is also not strong in India. Let me tell you now. This is again PNB scam. I don't want to go further. I would like to just give Rajat Gupta's example for information asymmetry. Again, what happens is, sometimes you may be a good person, but still you end up doing bad things. See his record. He's a mechanical engineer from IIT and then did his MBA from Harvard Business School. He's from Kolkata. He's into global health. He's into global business. A lot of philanthropy activities. But I will not show this to you. The verdict is that he was jailed for one simple reason. Being such a high-profile businessman, he was in the board of many companies. During 2007 and 8 economic crisis, the global financial crisis, there was one company called as Galileo, which was also into deep crisis. He was given a chance to be in the board of meeting because he was one of the directors. In that meeting, Warren Buffett, you may be knowing, Warren Buffett has decided to take over that company, to invest so much of money. I don't remember the money, the tune. Okay, it's here, I think. Yes, 5 billion investment by Warren Buffett. So now that information was known only to this fellow, Rajat Gupta. During the lunch break, he gets a call from one of his closest friends, say, Jagdish making a call to me. And I asked Jagdish, sir, ಏನು ನಡೀತಾ ಇದೆ, ಏನು ಸಮಾಚಾರ, ಏನು ಮೀಟಿಂಗ್ ಅಲ್ಲಿ ಇದಿರಲ್ಲ, ಏನು ಸಮಾಚಾರ, ಏನು ನಡೀತಾ ಇದೆ? ಏನಿಲ್ಲಪ್ಪ, ಇನ್ನೇನು ಪ್ರಾಬ್ಲಮ್ ಇಲ್ಲ. ಗೆಲಿಲಿಯೋ ಕಂಪನಿಗೆ ವ್ಯಾರನ್ ಬಫೆಟ್ 5 ಬಿಲಿಯನ್ ದುಡ್ಡನ್ನ ಈಗ ಹೂಡ್ತಾ ಇದ್ದಾನೆ. ಈಸ್ ಇನ್ವೆಸ್ಟಿಂಗ್. ಸೊ ಫ್ರಮ್ ಟುಮಾರೋ ದಿಸ್ ಕಂಪನಿ ವಿಲ್ ಬಿಕಮ್ ಇಟ್ಸ್ ನೋ ಮೋರ್ ಇನ್ ಕ್ರೈಸಿಸ್. ಇಷ್ಟು ಇನ್ಫಾರ್ಮೇಶನ್ 30 ಸೆಕೆಂಡ್ಸ್ ಅಲ್ಲಿ ಹೇಳಿದ್ದು, 30 ಸೆಕೆಂಡ್. ಅವನೇನ್ ಮಾಡ್ತಾನೆ, ಯಾರೋ ಫ್ರೆಂಡ್, ಜಗದೀಶ್ ಫ್ರೆಂಡ್, ನಾನೇ ಅನ್ಕಡೆ, ನಾನೇನ್ ಮಾಡ್ತೀನಿ, ಇವತ್ತು ಸಂಜೆ ಇನ್ನೂ 3 ಗಂಟೆ ಇದೆ ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟ್ ಕ್ಲೋಸ್ ಆಗೋದಕ್ಕೆ, ಗೆಲಿಲಿಯೋ ಕಂಪನಿದು ಶೇರ್ಸ್ ನ ಪರ್ಚೇಸ್ ಮಾಡ್ತೀನಿ. ನನ್ನ ಹತ್ರ ಎಷ್ಟು ದುಡ್ಡಿದೆ ಅಷ್ಟು. ಐ ಬಾಟ್ ದ ಶೇರ್ಸ್ ಆಫ್ ದ ಕಂಪನಿ ಬಿಫೋರ್ ದ ಎಂಡ್ ಆಫ್ ದಿಸ್ ಡೇ, ಅಂಡ್ ಟುಮಾರೋ ಮಾರ್ನಿಂಗ್ ವೆನ್ ದಿಸ್ ನ್ಯೂಸ್ ಬಿಕಮ್ಸ್ ಅಫಿಷಿಯಲ್, efficient markets, suddenly there was a rise in the shares of the Galileo company. Immediately he sells. Within 24 hours, he makes 1.2 million. Within 24 hours, $1.2 million he makes because of that 30-second conversation. ಆಮೇಲೆ ಅಲ್ಲಿ Security Exchange Commission in America is very strong, unlike our SEBI. they started looking at why one transaction ಇಷ್ಟೊಂದು ದೊಡ್ಡ ಪ್ರಮಾಣದಲ್ಲಿ ನಡೆದಿದೆಯಲ್ಲ, ಏನು ಯಾವ್ದು ಇರ್ಬೋದು ಇದು ಅಂತ. ಯಾರು ಇರ್ಬೋದು? ಎಸ್, ರಾಜರತ್ನಂ. Then Rajaratnam call details, they took all the call details and one of the calls went to Rajat Gupta. 30 seconds ಮಾತ್ರ ಇದೆ ಅದು. ಆ 30 seconds ಅಲ್ಲಿ ಏನ್ ಮಾತಾಡಿದ್ದಾರೆ ಅಂತ ನೋಡಿದಾಗ ಈ ಇನ್ಫಾರ್ಮೇಶನ್ ಹೇಳಿದಾನೆ. ಪಾಪ ಅವನೇನು ನೀನ್ ಹೋಗಿ ದುಡ್ಡು ಮಾಡ್ಕೊ ಅಂತ ಹೇಳಿದಲ್ಲ. It was a casual talk. He just said, from tomorrow this company is going to get a very good investment from Warren Buffett. Nothing will happen. It's all fine now. Only 30 minutes conversation. Now he resorted to insider trading. Now an investigation was being done, and for Rajaratnam, his friend, he was put on 12 years of imprisonment. But for sharing this information, even Rajat Gupta was also given 2 years of imprisonment by Security Exchange Commission. Even though entire his career he did so many good things for health, philanthropy, even Indian School of Business, ISB in Hyderabad, was founded by him. Say that school is branded as better than IIMs. It is at the very top. He was the founder member of that business school in Hyderabad. So a good man, one small, a few minutes of, a few seconds of what you call, he just let his guard and he was convicted. So ಒಂದ್ಸಲ ಏನಂದ್ರೆ ನೀವು ಹೇಳ್ತಾರಲ್ಲ, ಅಡಿಕೆ ಕೊಟ್ಟ ಹೋದ್ಮಾನ ಆನೆ ಕೊಟ್ಟರು ಬರಲ್ಲ ಅಂತ. Once it is gone, it's gone. So he is now 70 years old. He has come back to Hyderabad and he is now staying. Now in all this, I've got till 10 minutes. I'll just rush through what is emerging legal infra. You may ask this question to me. What does the law do? These people are making money. They're just leaving the country, and innocent people are being has to face their lifetime savings into all these things. These are few of the examples. That there are hundreds of examples. Now, of late, I would say, from 2016 onwards, there is an attempt by the government in order to strengthen the law. As you know, by and large, Indian judicial infrastructure it's an over-regulated and under-enforced regime in India. Therefore, there are too many laws being passed. You never know whose jurisdiction ends where. So therefore, they made one thing. These are some of the new things that has been done. One is separate definition of fraud under section 447 of Companies Act of 2013. Creation of serious fraud investigation officer under section 212 of the act. Fraud ಅನ್ನೋದಕ್ಕೇನೆ ಡೆಫಿನೇಷನ್ IPC ಇಂದಾನೆ ತಗೋಬೇಕಾಗಿತ್ತು. ಈಗ ಏನ್ ಮಾಡಿದ್ರು, ಇಲ್ಲೇ ಒಂದು ಸಪರೇಟ್ ಡೆಫಿನೇಷನ್ ಮಾಡಿದ್ರು ಕಂಪನೀಸ್ ಆಕ್ಟ್ ಅಲ್ಲಿ. ಆಗ ಏನಾಗುತ್ತೆ, that fraud includes all the 4 sections of IPC: 405, 415, 463, 477, and then fraud ಗೆ 10 lakhs ಗಿಂತ ಜಾಸ್ತಿ ಆಗಿದ್ರೆ punishment up to imprisonment up to 10 years, and the fine is 3 times the fraud amount. Okay, it is non-bailable, and in order to give the grant to bail to these people, there are twin conditions. One is public prosecutor should be given enough opportunity to oppose his release. Second is he is not likely to commit any offense while on bail, should be made sure by the court. If these 2 conditions are there, then only he will be granted bail, otherwise no bail. And then under Prevention of Money Laundering Act, it will become a scheduled offense. The moment it becomes a scheduled offense, the government can confiscate their property, attach their property. The Enforcement Directorate has the power to attach the property. ಆಮೇಲೆ ಏನ್ ಮಾಡಿದ್ರು ಆಡಿಟರ್ಸ್, ಇದೆಲ್ಲ ನಡೀತಾ ಇದ್ದು with the both of them coming together. If the auditor deceive the regulator, even he is as good as he has committed the fraud under section 140. So he can also be booked, imprisoned for 10 years, and he can also be fined 3 times the fraud amount if the auditor willingly not give the information about the fraud. And then there is one more latest development that has happened in October 2, 2020. Initiation of forensic audit. Forensic audit. If somebody, a whistleblower, any stakeholder can shoot a complaint to the SEBI, the regulatory authority, that there is a smell, the Brahmastra, this is called as Brahmastra, forensic audit. I do not know to what extent this is going to be effective, because it is still new. And forensic, what does it mean? It means you are coming out with a report which is suitable for use in a court of law. And a forensic auditor should not only know accounting, but also he should know auditing and investigative skills. It's a separate line of activity altogether. It's a specialized activity. You should also know the criminology, fraud psychology, and also accounting. You just see, this is the multidisciplinary. Now, if at all somebody becomes a forensic auditor, I think in COVID times, after the COVID ends, they have got very good opportunity. And then Fugitive Economic Offenders Act, very recently been enacted. So this is another act, and one more act is there, IBC. This is a landmark act. I would not like to go about it. Since I'm completely out of time, what I've tried in my time that is allotted to me is that there are connections between economics, commerce, management, law. That is one part of it. Second is, if you are giving an integrated picture to a particular problem or a concept or an issue, your delivery as a teacher will be very impactful to the student. It adds value to the student. This is what I have learned over a period of time. Now I would like to listen to you. Just none of thank you.